Thinking about buying a home? Let's talk about the big question on your mind. How much do I need for a down payment? Do I need to save up 20% before buying a home, or can I put less money and still be okay? Today I'm breaking it down so you'll have a game plan for when you're buying your next home. All right, let's start with the very basics. A down payment is the upfront that you pay when you buy a home. It's usually a percentage of the home's price. So for example, if you're buying a home that is $300,000 and you put 20% down, well, that's a $60,000 down payment. Now, the rest of the purchase price of the home is covered by the mortgage loan. The important thing to remember here is that your down payment can affect several parts of your upcoming mortgage: your monthly payment, your interest rate, and even the type of loan that you qualify for. So here is the good news about this. You don't always need 20% down. Now, some mortgage loans don't require down payment at all, while others let you make down payments as little as 3%. Here's a quick breakdown. Now, for conventional loans, the minimum is 3%, but anything under 20% usually means that you're going to have to pay private mortgage insurance, or PMI. Now, private mortgage insurance can raise your monthly payment, and those extra payments won't drop off until you have at least 20% of equity baked into things. Then we have VHA loans, which require a minimum down payment of 3.5% if you have a credit score of at least 580. Now, if you have a credit score that is between 500 and 579, you're going to have to put down at least 10%. For those of you who qualify, VA and USDA loans may not require a down payment at all. VA loans are available for veterans and service members, which, by the way, thank you for your service, and eligible surviving spouses. Now, USDA loans are set aside for rural home buyers. Now, if you think you might qualify for one of these loans, be sure to tell your agent or your lender at the beginning of the mortgage process. And if you're looking for a home loan that is more expensive than the conforming loan limit set by the Federal Housing Finance Agency, you can check out jumbo loans. Now, these loans require at least 10% down, although you may be required to make a larger down payment if you have a lower credit score. Now, why might you want to put more money down? Well, first, it means borrowing less, which lowers your monthly payments, and if you put down 20% or more, you can avoid PMI altogether. And trust me, skipping PMI can save you thousands over the life of the loan. Now, more equity upfront also makes you a lower risk borrower, which can help you get better interest rates. Plus, starting with more equity can give you the financial freedom, or the flexibility rather, for later, like tapping into a home equity line of credit if you ever need it for that dream kitchen, the porch in the backyard, or whatever you need it for. Now, finally, a larger down payment might make getting approved for the loan easier, especially with smaller community banks or credit unions. They really like to see borrowers who are more invested into their new homes. But before you go rating your savings, let's talk about why bigger isn't always better. First, using up all your cash for a down payment can leave you without a safety net, or a buffer, shall we say here. And here's one example. Let's say you just moved in and suddenly the furnace breaks, or air conditioning. If you have no savings left, that is going to be a stressful situation. Now, another issue that saving for a huge down payment might take years, and while you're saving for this home here, home prices could increase, or the house that you had your eye on might sell before you even are able to pick it up. Also, that extra cash that you're putting down could earn you money elsewhere, like in stocks or in some sort of retirement fund. So let's see how your down payment affects your monthly payments. So let's say you're buying that house that we referenced a moment ago for $300,000 with a 30-year mortgage at 7.125% interest. Now, we're going to assume that PMI rate of 1.5% if you put down less than 20%. Now, with a 5% down payment, your loan is $285,000, which means a monthly payment of about $2,559, including PMI. Now, increase your down payment at 10%, and you're going to save about $100. But here's where the magic begins. At 20%, no PMI, and the total monthly payment of $1,181. That is a big difference. So the next question is, how do you save for that down payment? Well, first off, friend, start with a budget. Write down every dollar that is coming in and going out. And once you know your spending habits, you can find areas that you can cut back, throttle back a little bit. Next, open up a savings account just for your down payment. Automate the deposit so you're saving without even thinking about it. And if you're serious about fast tracking your savings, look at extra ways to make extra cash or income. And here is a tip. If saving feels impossible. Check out assistance programs. Grants can cover part of your down payment and don't need to be repaid. Forgivable loans are another option. Now, these loans are forgivable if you stay in the home for a certain number of years. And then there is even the shot of even your employer might have home buyer perks. Don't hesitate to ask. Gifts from family members may also be an option, but check with the lender for the rules. So that explains most of what you need to know about down payments. So whether you're putting 3% or 20%, the most important thing is to find what works with your budget and your goals. Buying a home, it's a big step, and with the right plan, it is absolutely doable. Now, you got questions? I'm here to help. If you're ready to begin your home buying process, I'll help you every step of the way. If you like this video, be sure to hit the subscribe button to our channel and hit the notification bell to know when we publish new videos. Also, please like the video, share it with anybody that you know who is on the market for a new home. With that said, friends, I hope you enjoyed this small, bite-sized, easy to digest video on down payments. I will see you in the next one.